In the ever-evolving landscape of the U.S. economy, last week was nothing short of a roller coaster. With looming labor strikes, potential policy shifts, and the shadow of inflation growing larger, there's a lot to unpack. But before we dive deep, have you ever wondered about the silent forces that drive the stock market? The intricate dance of policies, labor decisions, and global events that can make or break an investment. Well, today, we're about to unravel one such story that could have significant implications for certain stocks. So, let's take a closer look at the news. Peter Schiff, a renowned gold bull, has recently hinted at a potential shift in the Federal Reserve's stance on inflation. While the Fed has always maintained a 2% inflation target, Schiff believes that they might be subtly moving away from this figure. If this speculation holds any water, it could have profound implications for Federal Reserve monetary policy, and by extension, the broader financial market. But that's not all. The U.S. auto industry, which has been steadily recovering from the pandemic and the semiconductor shortages, might be facing another significant hurdle. The United Auto Workers, UAW, are considering a strike, and if they decide to go ahead with it, companies like General Motors, Ford Motor, and Stellantis could be severely affected. A potential 10-day strike could result in a staggering $5.6 billion hit to the U.S. GDP. The ripple effects of such a move could even push the Michigan economy towards a recession. Inflation, too, is rearing its head in unexpected ways. August saw the Producer Price Index, PPI, record a year-on-year increase of 1.6%, a sharp rise from July's 0.8%. This surge was way beyond what most economists had predicted, and it reignites concerns about the future trajectory of inflation. The Federal Reserve is also in the spotlight for another reason. Reports suggest that it has incurred losses exceeding $100 billion. With its interest costs surpassing its earnings from bond interests and financial sector services, these losses might even double, reaching a staggering $200 billion by 2025. Lastly, billionaire investor Chamath Palihapitiya has highlighted a concerning trend from recent U.S. Census data. It seems that U.S. incomes have been on a decline, with a corresponding rise in the poverty rate during the Biden presidency. This trend, if it continues, could have far-reaching consequences for the U.S. economy and its citizens. Now, with all this information, one might wonder about the potential impacts on the stock market. Companies like Stellantis, Ford Motor, and General Motors could see significant volatility in their stock prices. If the UAW strike materializes, it could lead to short-term losses. However, any resolution could also result in a rebound. The broader implications of the Federal Reserve's decisions and the inflation trajectory could also influence investor sentiment, leading to shifts in stock valuations. Alright, folks, as we wrap up, I want to remind you of the power of staying informed. If you found this video insightful, do give it a thumbs up. It helps in getting this video more visibility. And if you haven't already, hit that subscribe button and drop a comment saying you've subscribed. We'll make sure to respond. Also, what are your thoughts on these economic developments? Do you think they'll have a long-term impact on the stock market? Let us know in the comments below. And don't forget to check out our daily EV stocks pre-market report, where we provide target numbers for over 20 EV-related stocks every day. Until next time, stay informed and make wise investment choices.